All right, Bismillah. Today is December 23rd, 2024. I want to review ES price action for today to see if we can find some strategies and some setups to utilize ICT concepts geared towards profitability, at least for today. All right, let's get into it. I always keep this chart on the screen to kind of remind me to kind of like have a more balanced approach to decision making. These are the 6 thinking hats of Eddie DeBono. Additionally, these are the 7 fundamentals of one good trade outlined in the book by the same title, One Good Trade by Mike Bellafore from SMB Capital. Today we didn't have any high impact news. We had some moderate news, 8:30 and 10. Honestly, these are the current numbers. I just took the screenshot not too long ago. This is not necessarily something that I review. It's just to be aware of the economic drivers in the market. So let's just go ahead and get into the chart. Yeah, this is a weekly chart. And all right, so this is what happened here. So this would be in, let's do this here. But this would be in order block. Both of these candles is the order block technically. And we can highlight that, we can draw that out. I'm gonna just use this one here. You can see what's going on here. The order block, again, this is a bullish order block on a weekly time frame. All right. And you think, so this would be internal range liquidity, this order block. And this would be technically internal range as well. We have a inverted fair value gap here as well. So we have a volume imbalance and we have a inverted fair value gap, which may or may not be a source of contention for price to move higher. So we're not there yet. So this is something you don't have to use order blocks. So this is something I use. You could technically use this wick as well. Let's see what that looks like. Right. Technically use the wick, and you can see price is reacting to the to the quarter of that wick. So if the order blocks aren't part of your strategy, then ignore it. If the wicks, treat wicks like gaps, put them into quadrants, and you can see this is last week's, this is the wick, this wick from the previous week, and here is how price is reacting to that wick. But again, you don't need to have everything on your chart. You don't need to have everything or implement everything in ICT's arsenal to get closer to profitability. You just need to be consistent with your approach to the market. You need to be consistent as an individual, as a person, and consistent as a trader, like your approach. So all right, so that's off the weekly time frame. My favorite time frame is the 4 hours, so that's why this girl is over here, because I can't separate from her. Right. Anyway, that's the 4 hour. And let's say we didn't use that 4 hour chart. Let's say we didn't use these weekly PD arrays, like as I just outlined. You can use this this daily wick right here from the previous 2 days ago. And we can see that and we can kind of see that price is reacting to this wick as well. And halfway point. Additionally here, if you wanted to combine, so that's the daily time frame. This would be a logical step down from the daily. And all of this right here would technically be a breaker. And it doesn't look like it reached the halfway point, but let's all right, so we have a breaker. Looks like it did hit like a consequent encroachment of that. Let's see. Let's get some more precise now. That halfway point would be $59.65. The low of this candle is $59.65. So that is pretty precise. Not that honestly, precision doesn't really move me. It's all about profitability. Can you actually have taken advantage of this move, of this PD array at the time? That's more important than the precision aspect. All right, so I'm going to erase this because we don't need it. But so we use the weekly, we use the daily, kind of show the weekly at first, and here's the daily using this 2 days ago wick. This is Thursday's candle, and breaking that into quadrants, and alongside the 4 hour breaker block. All right, from there, let's change this one to the 4. Let's get rid of this thing. All right, and change that to the 1 hour. All right, here we can see, here that price ran sell side liquidity, pushed higher, traded back down into this breaker. You don't like that breaker, you can use this 1 hour breaker here. Breaker block. And you can just keep stepping down. All right, so anyway, the midnight open, you see that price isn't still inside the upper quadrant of the previous day's range, which is referring to Friday. All right. And there's another setup here that I for me to see. I'm not trying to be like, all right, this right here, this I'm gonna take this off. But this is what, right? So we have this 4 hour breaker, and then we have optimal trade entry utilizing this order block. um, as a shift in market structure here, right? Didn't pull all the way back down. Where are we? It's the 4-hour. All right, so we have so it didn't pull all the way back down, but we have 61.8 entry, and this will be the target. Didn't quite make it there. However, if you did it based off of the highest body, then we have the same entry, 59.65 and 59.66.50 would be optimal trade entry long. And we can see that right here. All right. So yeah, the order block 50 on the 1 hour, it would be pretty much anchoring it to a breaker. I'm gonna use the swing high because I'm more comfortable that way. The only problem is that you have to consider that the bulk of the volume of the candle is in the body, not the wicks. And you can also do like the quadrants on this wick as well to see what price like had stopped at a quadrant, the lower quadrant of the wick, and then once you see that weakness, just get out, right? All right, so it's literally the trade I wanted to highlight. So we also have our market last night when price moved up here. This is what I was looking at here. This highlight both. Right, you have this bearish order block that was reacted to here, violated here, pull back down, and it's holding. And you can see we have a market maker buy model, right? Sell side of the model, and this is the buy side above this consolidation area. So all right, I still like to see my 4-hour chart, man, because so yeah, here we can actually see that price is in a consolidation. Price rallied on Friday, boom, and we can have it consolidating here because it's consolidated in this candle on Friday, Sunday, this Sunday range here, Monday, right? So Friday into today on this 0600 hour candle consolidation. So we have a price breaking out of this consolidation and then breaking out of the high of this consolidation. So if we are going from internal range liquidity, then the first target would be this relative equal highs. And we can see that was cleared. It actually coincides with this inverted fair value gap. Well, now it's inverted. Prior to that, it was a bearish fair value gap. Again, reaction here, reaction here, reaction here. Even here is reacting to these levels as well. But yeah, right. So here we have a break in market structure here, and we have a push higher. What else do I want to say? I think that's it, right? Looks like it's not like anything worthy here because it's consolidating, but 15-minute time frame. Anyway, at this level, OT entries, it makes life a lot clearer. Utilizing order blocks and utilizing breakers, it's not essential, but that also makes life a lot more simpler. But also keeping that high time frame perspective in mind. And again, we went through the weekly, we went through the daily, utilizing different PD arrays to do similar types of reactions from the 4-hour time frame. But yeah, so I think that's all I have for now. What time did that happen? This was at 10 o'clock. This was at 1500, 3 p.m. And you can see, anyways, this is very, very, very exciting. This is kind of like, all right, so you say, so this is the London close between 10 and 12. You could expect the low. I think it's the low of the day occurring between 10 and 12, low or high of the day. So this was the low being put in place. You can say a silver bullet as well, probably drop down to a 5-minute chart, and probably can see a better opportunity for a trade. We have this, so this is sweet, right? So we have this bearish fair value gap here, right? Then you have a run up, and you have this candle here breaking this candle's high. All right, and then you have a retracement back down into this inverted fair value gap. And that's just how I would see it. All right, and that's also an optimal trade entry. I'm gonna take this off. And optimal trade entry long. Standard operation. Not quite, but it went below 50%. Body to body, glorious. You can do it. Utilizing that long wick, and that's something to look at. Why did it fail? But also you have these long wicks. Remember that the bulk of the volume is in the body of the candle. So that could be a criteria for your optimal trade entries. If there's like a long wick or signal bar or whatever you want to call it, right? This long wick here, you can say, okay, I'm not utilizing the wick. I'm going to use the body because of the wick. You can say that's like a clear bullish pattern, right? This long wick stabbing down, rally in here. Let's say rally is a 5-minute chart, but whatever. And you see prices sweeping below this level, 61.8 level. And then you have a push higher into, if you took it here, then, or here rather, about 3 standard deviations approximately. That's good, right? Where's all the words at, right? Like, where's the words at? Hold on. 5 minutes, I think okay. And, all right, it's only on the 5 minute now. All right, so 61.8. First profit, target 1, target 2, 1 standard deviation. You see price holding that level, holding this level technically. You're not gonna rely on fib levels, but right, broke this, pull back into this imbalance. And then we have a push higher into 2 standard deviations. That's good enough, right? Trade it into this 15-minute fair value gap, or above this consolidation, however you want to call it, however you want to play it. That's on you. But this is even clearer of a market maker buy model. But how would you know, right? How would you know, right? You can say price reclaim this level here into somewhere over here. There's a lot of factors here. Anyway, thanks for listening. Please like, comment, subscribe. That sounds foreign to me, but let's cook. Let's get it.